Welcome! In this video, what is the next move of ZBCN coin from here? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The existence of such a descending trend structure is highly significant from a technical analysis perspective, and is an element that investors should evaluate carefully. A descending trend line typically serves as a dynamic resistance line where the price has previously reacted downward multiple times, indicating strong selling pressure. This line reflects a persistent downward tendency, with the price making lower highs over time. However, each touch of this trend line also reveals that buyers are watching the area and assessing the potential for a breakout. Now, let's analyze the scenario of breaking this descending trend line in a detailed and optimistic manner. First of all, a breakout of the descending trend line signals that the market no longer accepts the existing bearish sentiment and that a new bullish perception may be forming. Technically, this is considered a highly positive signal, as it may indicate the end of the bear market and the beginning of a shift in control toward the bulls. The longer a descending trend line remains unbroken, the more significant it becomes as both a psychological and technical barrier. Therefore, breaking through this line can prompt many investors to enter long positions, which in turn increases buying volume and may accelerate the price's upward momentum. When a breakout occurs, there are a few critical elements that investors should pay attention to. One of them is whether the breakout is supported by volume. If the price breaks above the trend line and trading volume significantly increases at the same time, it suggests that the breakout is genuine and accepted by market participants. On the other hand, a breakout without volume is often short-lived, and the price may fall back below the trend line. A breakout with strong volume, however, is more likely to be sustained and can open the door to a new uptrend. The breakout of a descending trend line also triggers a major shift in investor psychology. This is because it forces those holding short positions to hit stop losses or close their trades, adding more buying pressure to the market. Meanwhile, buyers who see the breakout may rush in to open long positions to avoid missing the opportunity. This can not only push the price above the trend line, but also lead to a quick move toward previous high levels. If the price retests a trend line after the breakout and successfully bounces off of it, this confirms the validity of the breakout and signals the beginning of a stronger upward movement. If the uptrend continues, the first target is typically the major horizontal resistances that existed before the descending trend. Once these levels are surpassed, new highs may begin to form. In other words, breaking a descending trend line may not only trigger a short-term rally, but could also mark the start of a medium to long-term trend reversal. That's why such a breakout is not just a technical event, but a strategic opportunity for investors. Entering a position at the beginning of a bullish trend maximizes potential returns. A common scenario in technical analysis is this. When a descending trend line is broken, the price often rises quickly. However, a correction may follow this initial surge. During this pullback, investors observe whether the price will return to the old trend line. If the price retraces to this level and finds support there before bouncing upward, it confirms the trend reversal. This setup is a textbook example of the break, retest, rally strategy and reflects a healthy bullish structure. In cryptocurrency markets in particular, breakouts from descending trends can have massive potential. Crypto investors closely watch these technical structures and tend to act collectively based on them. When a descending trend is broken, the news spreads quickly on social media, attracting even more investors into the market. This further increases buying volume and contributes to a faster rise in price. Additionally, algorithmic trading systems often interpret such breakouts as buy signals, and their involvement can boost the upward momentum even more. In conclusion, breaking a descending trend line is one of the most bullish technical patterns. This breakout indicates that the market no longer perceives weakness and that a new bullish trend may be starting. If the breakout occurs with volume, momentum, and clarity, the price may have significantly more room to move higher. In such a scenario, investors can benefit from entering near the bottom, enjoying a more secure and potentially high-reward rally. Therefore, descending trend breakouts are not just graphical formations, but important decision points that shape an investor's strategy. As always, any retest after the breakout should be watched carefully, and strategies should be updated flexibly according to these technical signals. Success in technical analysis depends not only on recognizing patterns, but also on correctly reading the psychology, volume, and price reactions behind them. In this context, being aware of a descending trendline breakout allows for more solid and rational decision-making within the market. But we can't make decisions based on only trend lines. Let's now take a look at other metrics. Stay tuned.
The fact that the price is currently forming lower lows and lower highs is a classic indication of a downtrend in technical analysis. This structure shows that sellers are dominant in the market and the buyers have not yet entered with sufficient strength. A lower high means that each new rally fails to reach the previous peak, while lower lows indicate that the price is dropping to new depths with each pullback. This typically reflects that investors are still cautious and expect the price to potentially decline further. Therefore, this type of structure is usually perceived as a sign of weakness by market participants, prompting more careful behavior among investors. However, in technical analysis, such downtrends never last forever. Every downtrend eventually reaches a turning point and may transition into an uptrend. This shift is usually triggered by a structural change observed in the price action. At this stage, the concept of higher low and higher high comes into play. If the price breaks out of the pattern of lower lows and lower highs and starts forming higher lows and higher highs, this signals that the downtrend has likely ended and a new uptrend has begun. This structure shows that buyers are gaining strength while sellers are losing control, indicating a shift in market sentiment. A higher low suggests that buyers are no longer allowing the price to fall to previous lows, that market confidence is increasing, and that investors are now willing to buy at higher levels. This indicates that the market is preparing to change direction and may be on the verge of starting a new upward trend. The subsequent higher high confirms that buyers are not only defending the lows, but are also strong enough to push the price to new highs. The combination of these two elements forms a strong trend reversal signal. If the price exits the current lower low and lower high pattern and forms a higher low followed by a higher high, this is an extremely positive signal for investors. This structural change reflects a shift in market direction and the beginning of a new bullish wave. In technical analysis, these kinds of structural changes are critical for trend-following strategies. Especially for investors looking to enter near the bottom, the formation of a higher low and higher high provides a solid foundation for long strategies. Additionally, the formation of higher lows and higher highs can trigger a psychological shift among investors. Even those who previously lacked confidence in the market or believed the downtrend would continue may start to acknowledge a reversal. This brings new buyers into the market, increasing the upward momentum. Breaking a previous high in particular signals a confirmed trend reversal on many technical analysis screens, leading to increased buying pressure. Such structural changes often present opportunities for investors, especially if the price exits a downtrend and forms a higher low followed by a higher high. Opening a position at this stage may be a logical move. However, it is essential to define stop-loss levels clearly. In technical analysis, probabilities are discussed. No pattern offers a 100% guarantee. Therefore, risk management should never be neglected. For example, if the price forms a higher low but then drops below the previous lower low, it invalidates the bullish structure and the position should be closed. In conclusion, the current lower low and lower high structure may suggest that market weakness and a bearish trend are still in place. However, every trend in technical analysis eventually comes to an end, and that end often begins with the formation of a higher low and higher high. If the price starts forming this structure, it is a very positive development and may signal the beginning of a new bullish phase. Investors who closely monitor these structural changes can open more successful positions and capture major market moves. Especially if trend reversal signals are supported by volume and indicators, these types of technical analysis interpretations can yield highly effective results. Therefore, every low and high in the price structure should be carefully examined, and attention should be paid not only to the charts, but also to market psychology. Because every technical pattern is essentially a reflection of investors' emotions on the chart. A higher low and higher high structure is not just a formation, it's a signal of the market's rebirth.
RSI, or the Relative Strength Index, is one of the most commonly used oscillators in the world of technical analysis by both retail investors and professional traders. RSI is a value that fluctuates between 0 and 100 to indicate whether the price is in an overbought or oversold zone within a specific time frame. Typically, a 14-period RSI is used, which calculates based on the closing prices of the previous 14 candles. In the RSI indicator, values above 70 are generally considered to be in the overbought zone, while values below 30 are seen as oversold. However, taking positions based solely on these thresholds can often be misleading. Therefore, analyzing RSI through trend structures and drawn support-resistance lines provides a much deeper level of analysis. This is exactly where trend lines formed on the RSI, either ascending or descending, play a critical role in understanding price movements in advance and detecting momentum shifts in the market. Especially a descending trend line shows that RSI has been forming lower highs over time, meaning each rally attempt has been weaker than the last. This indicates that the market is losing momentum. However, if this descending RSI trend is eventually broken, sometimes even before the price itself breaks out, it can signify a major momentum shift and often foreshadows a strong upward move. In the current technical setup, there is a clearly defined descending trend on the RSI indicator. This descending trend shows that RSI has been consistently making lower highs and is compressing within a downward channel or line. Even if the structure isn't clearly visible on the price chart, it can be observed very clearly on the RSI. This descending line essentially acts as a ceiling or pressure line that RSI has drawn for itself. Each time RSI approaches this line, it retreats, suppressing price's attempts to rise. However, there is an important principle in technical analysis. Every trend exists to be broken. RSI is no exception to this rule. Therefore, the descending trend line formed on the RSI, while it indicates that price action is under momentum pressure, also represents a critical breakout zone. And if this line is broken, a momentum explosion may occur within market dynamics. Why is this breakout so important? Because the breakout of the descending trend line on RSI is not just about breaking a line. It is a strong signal that investor psychology is shifting, sellers are losing strength, and buyers are preparing to take control of momentum. In other words, when RSI breaks its descending trend, a psychological barrier is also overcome. As this barrier is crossed, pressure on price movement decreases. Investors start to enter more confidently, and this can lead to a strong upward rally in price. Especially if, after breaking the descending trend, the RSI value rises above the 50 level and holds there, this is technically interpreted as the beginning of positive momentum. The RSI 50 level is often considered by technical analysts to be the bull-bear boundary. So if RSI not only breaks its descending trend, but also establishes itself above 50, it can be assumed that an upward trend has started in the market. This is also taken as a strong signal that the price will likely continue upward. Moreover, if this RSI breakout is supported by high trading volume, it indicates that the breakout is not fake, but rather the beginning of a strong structural transformation. Because just breaking the RSI line may not be enough. The important thing is that the breakout happens along with volume and momentum. If the price also breaks a resistance level in parallel with this RSI breakout, then what we call RSI alignment in technical analysis occurs. That is, both the price chart and the RSI break out in the same direction, which is usually the beginning of a strong bull market. For example, before many major rallies in the past, a descending trend line has formed on RSI. And with the breakout of this trend, price has gone on to post 2x, 3x, even 10x rallies. The breaking of the descending RSI trend line is essentially a sign that the preparation phase is complete. That is, price may have been consolidating or in a downtrend for a while, but when RSI breaks this descending trend, it signals that the energy buildup is over and the necessary momentum for a rally is now present. After such a breakout, RSI typically heads toward the 70 level. This is a sign that price has entered a significant uptrend. When RSI approaches or surpasses 70 and remains in that zone for a while, it shows that the trend is bullish and that the majority of investors are on the buying side. However, another key point to consider is this. If the descending RSI trendline breakout occurs not on short-term, but on medium or long-term charts, then the rally is likely not a move that will last just a few days. It could be the start of a bull wave that continues for months. Especially if such a breakout happens on weekly or daily RSI charts, it technically implies a more significant transformation on a larger scale. In conclusion, the descending trend line currently forming on the RSI represents a highly critical zone. A breakout above this line could signal a significant shift in price behavior. This breakout indicates that the influence of sellers is diminishing and that buyers are regaining strength. After such a breakout on the RSI, price often rises sharply as traders interpret this as a strong bullish signal and increase their buying positions. Especially if this RSI breakout happens simultaneously with a resistance breakout, the upward move could be even more powerful. For this reason, close attention must be paid to the descending trend line on the RSI. The breakout of this line is not just an indicator breakout, it's also a clear sign that market psychology and momentum are starting to shift. This breakout could be the very bullish signal that many investors have been waiting for and may lead to major profit opportunities in the subsequent price action. Correctly interpreting such RSI structures requires not only technical analysis skills, but also an understanding of market behavior and psychology. With the breaking of this descending trend on RSI, significant opportunities could arise for both short-term traders and long-term investors. This breakout may mark the beginning of a new uptrend and could be the first step in the price's journey toward new highs. RSI must break this trend.
Yes, friends. I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.